Hello.
Hello.
How are you doing today, Joy?
Well, my draft is not coming along very well.
Oh dear. Oh dear.
And I'm just looking over the feedback on my homework and for the EOC questions from the other day.
Oh, okay. Um, I've been grading so many things I don't remember. Um,
I'm typing up an email. Don't worry about it.
okay. All righty. Well, I'm gonna wait another minute or so.
It's 19 hours.
Oh well, it's 7 o'clock right now. So I tell you what, we'll just go ahead and get started. You can see my screen, can you?
Yes. I'm going to go ahead and mute just in case.
Yeah, no, that's not a problem. So, so what I'm going to do is go through some partnership scenarios. And I have a whole bunch of them there. We don't need to go through all of them, but each one has some little something different. And then I will just take whatever questions you or anyone else who shows up may have, okay? And I'm going to assume everything is okay, but I'm opening up the chat box here so I can see. Okay, so when we talk about partnerships, they're just a little bit different than corporations or any other kind of business because with corporations, the owners are separate from the business in terms of there's management that runs the business, but then all of the shareholders, they own shares and they receive income through dividends and, of course, through increases in the value of the shares. But with a partnership, it means that there are at least two that are joining together to do business. To have a partnership, you don't have to have some legal agreement, but it often is good to have an agreement because that means that if there's a disagreement that comes along at some point into the future, then you can refer back to the agreement. If there's no agreement, partnership agreement, then the Unified Partnership Act or something like that says that all of the profits and losses are borne equally by the partners. But anyway, I'm going to do some allocation of net income from the partnership to the partners' capital accounts. Be aware that you can make any agreement that you want. So you can make an agreement to pay interest on the equity, not pay, but to allocate interest. You can give certain partners salaries, or you can just say, whatever the net income is, we're just going to allocate it three ways equally. So, and then there's others as well, because sometimes, and we won't really get into this, but sometimes it may very well happen that the agreement says that nobody gets any salary unless the income is over, let's say, $80,000 a year. And so therefore, we have to then, of course, make a little bit more in-depth computations in order to figure out, well, of the net income that the company has, how does it get allocated to the partners? So in scenario A, we have here partnership, Maddie, Dana, and Sophie. And at the beginning of the year, their beginning capital balances were as shown: $23,500 for Maddie, $47,850 for Dana, and $61,240. That was the capital balance for Sophie. Now, below here, I have given you the amount of net income that the company earned during the year. and information on what the partnership agreement says in terms of a salary. And it's not really a salary, it's just like a salary allocation, interest, and then the profit and loss ratios. So the first thing that we're going to do is add the net income, because what we want to be sure of is that this is the total amount that we are allocating. All right. Now, the partnership agreement in scenario A says that Maddie gets a salary of $25,200 or a salary allocation, and Sophie gets a salary allocation of $18,000. And please note, the reason I'm using this term allocation is because in a partnership, the partners don't get paid a salary. Rather, excuse me, whatever is allocated to them, their share becomes taxable income to them. So the net income becomes taxable to them personally. The partnership itself does not pay income taxes. Okay, so the information that we have here for Maddie is that she was given a salary allocation of $25,200. Dana doesn't get any salary allocation, and Sophie gets $18,000. All right, so these are the salary allocations, and let me sum this up. So that of the $62,400, oh, actually, let me put this over into this column here. Of the $62,400, $43,200 went just towards salary allocations to two of the partners. So that means that, oops. Okay, what remains to be allocated after the salary is going to be the difference between the net income and the amount that was allocated for salaries. So there's still $19,200 that's left. But also in their agreement is that each partner, and I guess I should have carried this all the way over, because each partner gets 5% interest on the beginning of the year capital balance amounts. So I'm just going to highlight this because it may not be 100% clear. So to compute the interest, we take the beginning capital balance and then multiply it by the interest. And so for Maddie, she had a beginning capital balance of $23,500, and 5% of that is an interest allocation to her, and that 5% ends up being $1,175. And then we'll do the same for Dana. Dana had a beginning balance of $47,850, and she earns 5%, or he does. And then Sophie also earns 5% on her capital balance of $61,240. So now the total is, that's the total for the interest, is $6,629.50. So of the $19,000 that was remaining after the salary allocation, then there is going to be, after the interest allocation, remaining $12,570.50. So the remainder then is going to be distributed in the profit and loss ratio. So the remainder, 12,750, and we want to multiply. And by the way, let me go back here because you need to click on the F4 or function F4 if you're on a Mac. And what that does is it inserts these dollar signs, and those dollar signs mean that if we drag this formula across, it's always going to compute the distribution of the remainder as 12,570 and 50 cents, but it will multiply it by 30% for Maddie, 45% for Dana, and 25% for Sophie. So that's the remaining to be allocated. We'll multiply it by 30%. We won't put the dollar signs here because when we get to the other ones, other partners, we want to use these percentages. Okay. So the remainder then that's allocated to Maddie, 3,771 and 15 cents. To Dana, 5,656 and 73 cents. And then 3,142 and 63 cents. So now what I want to do is figure out, well, what's the sum of the remainder? And this sum needs to be $12,570.50. And thank goodness it is. Okay, so really after we allocate the remainder, there needs to be zero balance here. All right, so this is 0. And when we add up this total, which is in the green column, and I'm just going to use the sum button that's up here in the, I don't know what you call this, bar. Okay, and note here that, oops, okay, alrighty. Okay, I'll use this one here. So then okay. And so therefore, what we want to make sure is that the net income is equal to the amount that was allocated. All right, and we see that indeed it was. I'm just going to kind of edit the points. And I would like this one to come a little bit further over. Okay. All right, so we see then that this is the, that we've allocated it correctly. So the next step then is to complete the table. So we know that when using this summation sign here, that the total that would be allocated to Maddie from her salary, interest, and the remainder that distribution that she received is going to be $30,146.15. And then we can just copy that all the way over for each of the partners. So these are the amounts that were allocated. So at the end of the year, what will be Maddie's capital balance? Well, she started off the year with $23,500, and then she was allocated from the net income $30,146.15. So her ending capital balance is 53,646. But keep in mind, this does not include any withdrawals that she may have made. So if she had withdrawn some some money from the business or the partnership, then we would have to subtract the withdrawals. So if I'm adding right here and I'm going to say, okay, we have these withdrawals. And the withdrawals were 0. Then what we would do is we would take the subtotal minus the withdrawals to know what, oops, nope, that's not right. I forgot to add the beginning balance. Okay, there we go. So she's got 53,000, as I said before. So, all right. So for these problems that I'm doing, I'm not actually doing any with a withdrawal. I'm just going to be then recording the ending capital balance, assuming that nothing was withdrawn. So then now the question is, well, what is the adjusting entry or journal entry that we need to make in order to take the net income and allocate it to each of the partners? And that would be as follows. So we have got the account name, and then the debit and the credit. And I don't know what happened here. Here we go. All right. So for our journal entries, or it's actually only going to be one journal entry, there is, in the net income account, well, there's not a net income account, but really this is going to end up in the income summary account. And so we would debit income summary. And we're going to debit the income summary for the amount of the net income. And that was $62,400. All righty. And I don't want any dollar signs here. And then what we're going to do next is credit each of the partners for their shares. So we have got Mattie Capital, and Mattie would receive $30,146.15. Then we have Dana Capital, and Dana's capital account goes up by $8,049.23. And then we have Sophie Capital. And I can see I'm going to have a little problem here. I'm going to just round hers down to equal 24,204.63 minus a penny. And then that way my debits will equal the credit. So I should have, there's a penny difference here because of the rounding. So if I sum up all of my debits, and we don't normally do this with a journal entry, but because we have a complex entry here, I want to make sure that we have the proof that this entry, the debits equal the credits. So the sum of the debits we know is $62,400, and the sum of the credits, yeah, let me round back up here because it's coming out, I'm sure, Okay, hold on a second. Let's see, round this to 2 decimal places. And I want to round this. So I'm just using the round function, and 2 decimal places takes it to the nearest penny. And let me try this. Let me round this one also to 2 decimal places. And see, it's showing me that I'm off by a penny, and that's why. Okay, this one here, let me just do this again. It comes from right here. So what I'm going to do is just reduce this one here by a penny so that I can force it to balance. Because if, whoops. Oh, excuse me. I see what happened here, but I put it on the wrong one. Okay, there we go. So we can see here that our debits and our credits are equal to each other, and then this entry is finished. So I'm going to pause for a moment right now, and if you have any questions, now is the time. You can either ask them, unmute yourself and ask them, or put them into the chat box. Okay. So the question was, how did I get in this formula here that when it does the calculation, it's always looking at the remainder, but I call it tacking it down. So what you need to do is use the F4 button. So function 4 is across the top. Let me just give you an example here. So let's say that I want it to be, net income, and I always want it to look at that cell. So now what I'm going to do, if you have a Mac, then what you're going to need to do is hit function and then the F4 button. If you have, anything else, you can just hit the F4 button. And what the F4 button does is it puts the dollar signs there. So whenever you copy and paste or drag this formula to another cell, it's always going to look at that cell for at least the first part of the formula. Now I want to multiply it by, who knows, let's say here 5%, but I don't really want it to stay at 5%. So the number here is, all right, 6420 times 5%. This is a meaningless number really, but I just, okay, maybe, what kind of computer do you have, Joy? Because she's saying that her computer isn't doing this. So let's see if we can't figure it out fairly quickly. So is yours, oh. Yeah, you can. If you can't get it to work with the function sign, you can go ahead and use the dollar sign. Now, it's interesting because she's on a Mac, but she's running Windows. And I'm not too sure. I'm on a Mac too, but I just got Excel for Mac. And so I just use the function, which is the key in the lower left corner of the keyboard, that FN function. So I hold that down and then just hit the F4. But if that's not working for you or anybody else who is on the line, then please just type the dollar signs in. So here, what I could have done is, let's see. No, it's hard to see it there. So I can, if the formula is here, then I can just type in a regular old dollar sign before the column and the row number. And then that'll just, so whenever I count, so now there's nothing underneath here because it's going from 5% to 30%. So if I drag it down further, these numbers are going to be 0 because it's still looking at 62,400, but now it's going to be referencing one cell below and there's nothing there. So does that make any sense, or does anybody else have any other questions? Okay. So the next thing that I'm going to do is we'll just pick another scenario. It doesn't make any difference. I'm going to go to number C right now. And what I'm going to do is I'm going to let you guys take a moment. I assume that you have the file, and see if you can't work out how to determine the allocations to each partner. And feel free to ask a question. And now, okay, yes. Okay, let me just clarify here. Yes. So everybody gets the interest, but in this case here, Dana and Sophie don't take a salary. And there's various reasons why that could be. It could be that they have just invested into the partnership but not involved in the day-to-day operations, or, whatever. This is what they agreed on, okay? Okay, I'm going to go ahead and get started on this quietly in the background, and then we can kind of see how your numbers are comparing to mine. And please note that as I'm computing the interest, what I'm going to do is use the round function so that I don't end up with fractions of pennies that I can't see. And to use the round function, we just go equal round, open the parentheses, and then, actually, let me open it up here. So here is what I want it to round. I want it to round the interest, which is beginning capital times the 5% rate. And I want to round it to 2 decimal places because 2 decimal places is equal to the nearest penny. Okay, so yeah.
It's 1930.
Sorry. Okay, so somebody's worried about who's going to get the half penny. And most of the time, what I do is just take the half penny away from whoever has the most. So, in the last case, that's what I would normally do. And that's what I did in scenario A. Since Sophie had the largest distribution of the remainder, I just took the penny away, or half penny, from her. Okay. Well, right now I'm going to take it out of Dana, because Dana has the largest. Let me say subtract 0.01. Now, I know I'm kind of going a little bit quickly over this. So if you just want to, if you want me to open up a cell so you can see the formula, like here, just type the cell into the chat box and I'll make sure that you can see it. Okay. Now I see, Brenda, I see that you are on the line here. If you have any questions, or if I'm going a little bit too fast, please speak up. Now, when I say speak up, I mean you can just put something in the group chat and then I will respond out loud. Now, We also can do the journal entry here. Okay. And recall they had net income. And so therefore, we're going to debit the income summary account for the amount of the net income. And that net income was 212,000. Well, I'm gonna have to make these columns a little bit wider. All righty, let me get rid of a dollar sign. Okay. And then we're going to credit each of the partners for their share of the net income. So we have Maddie Capital, and we have Dana Capital, and then finally we have Sophie Capital. And the amounts then is what's going to be the subtotal here, which is the sum of their salary allocation, their interest on the beginning of the year capital balance, and their distribution or share of the remainder. And let's try this. All righty. I can't drag that one down because this is in a column and the numbers are in rows. So, and then now, all right, so Maddie's capital account is going to go up by 84,000. Dana's is going to go up by 140,000. And Sophie's is going to go up by 96,000. All right, and then I'm just going to double check that my debits equal my credits. And lo and behold, they do. All right, and the total debits should equal the total credits, which is the same amount of the net income. So what I'm going to do is make that a little bit lighter, so you know that when we prepare journal entries, we don't do these subtotals here. I'm just using the subtotals or the totals of the debits and the totals of the credits just to verify that I'm on the right track. All right. Now, let me see. I have a different one. Scenario F. Now, I've only got 4 minutes left before I'm going to have to start a new Zoom session because the recording is going to stop. But what I want you to do then is to compute the interest. So all I'm asking you to do for now is to compute the interest. Okay, so but please note that the interest, they've made the agreement that the interest is based upon the capital balance after the partner's salary allocation. Okay, let me add here. All right, so okay, so this one's going to stop. I want you guys to kind of maybe work on that while we kind of switch to the other next meeting, and then I'll let you submit your answers Aha. You know what? Yes, very good question. I need to update this because every partner is getting the same 5%. Okay. All right, so the time is running out. What I'm going to do is end this meeting, and then we just come back into the next one, which I believe is using the same link. Okay.